Crypto winter finished in June 14th, and crypto spring started. And spring is muddy, some days cold, some days sunny, some days wet, some days windy. But what follows spring is summer, and we're still in spring. So the market goes up and down, doesn't really do a lot, doesn't feel good for anybody, neither bulls nor bears. And that is the function of the economic cycle starting to turn.
Hey guys, welcome back to Library of Wealth. Today we have Raoul giving us a market prediction for Bitcoin and how the crypto landscape is looking for the rest of the year. Bitcoin is the world's most valuable cryptocurrency by market cap, and it has easily outperformed all other assets over the last decade. The 17 best performing asset classes from 2011 and 2021 were tracked last year, and Bitcoin handily topped the list with 230% annualized return. The Nasdaq index came in second on the list with a 20% annualized return. Raoul says that if Bitcoin prices have fallen to a 2-month low versus the US dollar, 46% of Bitcoin owners are still profiting. As spectacular as crypto assets' performance has been over the last 10 years, there are many hints that the following decade will be even more profitable. Let's check out this interview with Raoul. Don't forget to like and subscribe if you like what we do here on this channel. Let's get right into the video.
So I think people get confused with what crypto is a hedge against. Not a hedge against US dollars, because US dollar is the denominator of which most Bitcoin activity changes. Yes, you can trade ETH Bitcoin, but generally speaking, we quote a price and it's in US dollars. So if the dollar goes up, then the price of Bitcoin goes down. It's a very simple relationship. Ceteris paribus, all things remaining equal. It also has been a crappy hedge against inflation, because inflation, what we've got now is supply-driven inflation, and it is really not what Bitcoin does. What Bitcoin does is debasement of currency. Same with gold. People got very confused with gold, and it's done terribly. The great 1970s inflation, it came back, and we're supposed to see gold go to the moon. It's the debasement of currency where gold goes to the moon, and for that, you need to see M2 growth, you need to see liquidity, you need to see central bank balance sheets rising. We're just not seeing that. We're seeing the opposite. So it's bad. It's a bad environment. And dollar strength generally is a sign of liquidity leaving the system, which is bad. The dollar, the US is 25% of world GDP, but dollar transactions account for 87% of all transactions on Earth. So the dollar has an outsize versus its actual economic impact. So then when the Federal Reserve tinker around with the supply of money, and they've been reducing it, there's somebody out in the outer world who's like, I can't get my dollars. I call it a game of musical chairs. And the first game of musical chairs was the chair got rug pulled on Sri Lanka. It's the weak borrowers who can't get the dollars. There's less dollars around, and there's so many needs for dollars, so much borrowing goes on, that what happens is everybody competitively bids the dollar higher. I need my dollars. And the people who can't fall by the wayside. They can't pay their debts. So everybody's restructuring with the IMF. This is why the United Nations is talking about the strong dollar. It's a problem for countries who are weak borrowers. Also, the other reason, so the Federal Reserve is taking money out, but the US is also running less of a trade deficit. What is a trade deficit? A trade deficit is the US buying foreign goods with US dollars. Those dollars go into the global system. So if they're buying less foreign goods, or they're selling more of their own goods, what you're doing is taking dollars out. So you've got this perfect storm of dollars leaving the system and people needing them. And it creates this horrible dynamic of the dollar going higher over time. It's the dollar milkshake theory, as Brent called it, or the dollar doom loop is the other way that I've called it in the past, or the dollar wrecking ball, which is a terminology that I think I invented back in 2015. So as the dollar goes higher, generally speaking, assets denominated in dollars go lower. And so Bitcoin will go lower over time.
Retail investors were the driving force behind this movement during the last decade. However, sovereign wealth funds, global financial institutions, businesses, pension offices, governments, and other institutional investors are becoming more aware of the crypto market's potential. The Real Vision founder and CEO Raoul discusses his projection for the next phase of Bitcoin adoption. Powell estimates that Bitcoin will have expanded to a $50 trillion asset class in 10 years, with each of the 21 million coins worth more than $2 million.
Normally that would happen to things like the energy market, but the energy market's being driven by other supply and demand dynamics as well. So that is why it's very difficult for these global assets when it happens, because they tend to be depriced lower. It's a very deflationary force having a strong dollar. And I know we're living in an inflationary world, but we're setting up ourselves back up for a deflationary world by having a very strong dollar. Why is that? Well, look at the world's biggest exporting nations of finished goods. Japan, China, Europe, South Korea, Taiwan, all of their currencies have fallen massively. So they can sell goods cheaper to the US. So that's very good for the US because inflation falls. But difficult for those countries because inflation remains high. Complicated macro world out there. It's really about how we live our lives on the internet. It's really a broader question about who owns the information. It's who owns identity. These are the big questions. This is what 6529 is talking about, the open metaverse. Who owns this new digital world where we live in digital communities and digital societies? What ownership of goods? And yes, we can talk about ownership of an NFT as I've got on my token frame behind me, but really it's bigger than that. It's how do we transfer value and maintain identity in this new world? We were already seeing the rise of AI. And AI is terrifying in deep fakes. It's terrifying in what it can do and who it can be online. How do we know who's real and who's not? Well, identity is an urgent solve. It's an urgent solve because we're getting abused by the larger platforms because they use our identity, package it up and sell it to advertisers. Why should that be the case? Why should we not participate in that economy? That's coming. I know all of the big Web 2 platforms. I know them well. They all understand this. They know where it's going. It's just a matter of how do they transition away from advertising as is. But sharing it with the community, I think, is an important and powerful role. So in a digital world, everything digitized goes to zero in value because you can make infinite amounts of everything, including content, something we talk about at Real Vision a lot. Anything that gets digitized. So what you have to do is create scarcity. So in content world, you have subscription models. But what becomes more powerful is when you can put things on the chain. And by putting a JPEG on a chain, you've created scarcity out of nothing, out of something that could be infinite. And digital scarcity therefore allows value to occur because almost nothing in the world that is infinite has value. So by creating scarcity, that's the big unlock here. So scarcity and identity in this new digital world allows a massive change in global business models, including community Web3 driven stuff, but also how we operate in the metaverse and the digital world going forwards. So it's really my eyes on the future and what the world is going to look like in 12 to 18 months time. And considering how many people are building things, how many people want to disrupt things, how many people kind of know the sorts of things that we've been talking about endlessly and are doing something about it, I think is going to lead to extraordinary outcomes of which we don't yet know.
As crypto asset values continue to tumble, the former Goldman Sachs executive explains why he believes the market is on the cusp of recovering, despite the fact that crypto is in full panic mode. Over the last 24 hours, approximately $300 million in long and short positions have been liquidated across the cryptocurrency market. Many analysts wonder if Bitcoin adoption will overcome market volatility. What do you think about Raoul Pal's prediction for Bitcoin? Comment down below. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.